Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to talk a little bit about some of the dynamics at work in the market. But before we do that, we'll just have a look around the major developed markets around the globe. First of all, we've got the TSX up about 3% so far this year. The Dow's up 8% actually. We turn to Europe. We've got London flat. France and Germany are up about 5%. Hong Kong is up 3%, and Tokyo is the global laggard at down 5%. You'll remember, Kris, that story was much worse. Yeah. A few weeks back when they had their issues there, which they seem to be working through to some extent. Wanted to talk about some of the more macro issues driving market forces. Why don't we start with the recent GDP numbers?
Sure. Well, if we look at the gross domestic product, or GDP, as Grant said, in Canada, expectations were for growth of 4% in the first quarter of this year, and we actually hit 3.9, slightly lower than expectations, but still a pretty solid number. Going forward, I think the expectations are going to be softened a little bit. That's what it looks like out of the States, and Canada will probably be a similar kind of a trend.
Right. You know, it's interesting, Kris, that 4% as a number, or 3.9 where we came in, isn't actually a bad number to have an economy growing at an annualized rate of 4%. Mm-hmm. I think in terms of a recovery, that's pretty strong. We've seen the same story in corporate earnings, where we're just getting through the recent financials, and in the S&P we had a beat ratio of 68%. What that means is that 68% of those companies reporting beat the analyst expectations on their profitability. In Canada, we're almost to the end of the reporting season for the quarter, and we're just a hair over 70% right now. We're going to come in somewhere. What that's telling us is that the corporate earnings is indeed a friend of the capital markets right now, and that they're fairly robust.
Yeah. If we look more specifically to the Canadian banks, which are a very strong bellwether of Canadian corporate earnings, we've seen another pretty good quarter. Not as good as the last quarter, which is the first fiscal quarter of 2011, but still very strong. We've seen some dividend increases out of some of the banks in the last two quarters. We've seen a continuing downward trend in loan loss provisions. The one difference this particular quarter was a bit of weakness in wholesale banking, but Canadian banking by and large was quite strong.
And I think we got a dividend increase as well, so that's certainly a good point there. Wanted to turn to a couple of the other issues. Now, we've talked about these sovereign debt issues, particularly in Europe. If you're tired of hearing about Greece and Ireland and Portugal, that story has a long ways to go yet. I'm not sure how that's going to unfold. It is going to be in the headline for quite some time, Kris. It seems to me that the IMF and the EU are simply finding solutions that kick the can down the road. That can make it difficult to get any sort of finality out of all of this, and that's always going to play in the capital markets until we make some progress there.
That's right. Two other issues that are going on in the United States, a little closer to home here, is the U.S. is rapidly approaching, if they haven't already reached, their debt ceiling, and then the end to what they've called this quantitative easing 2, which are both nearing the end of June here.
Yeah. I don't really know how that's going to play out, Kris. I don't think anybody does. I don't think it's going to suddenly come to a conclusion and shock the markets. It might take some time for us to review the numbers associated with what that behavior brings into the markets. Mm-hmm. It is something that we're watching, trying to estimate where this may go and what some of the banker resolutions are going to be.
That's right, and the last factor really is the prospect of rising interest rates. We heard recently the Bank of Canada kept rates on hold, but opened the door for rate increases sometime later this year, and that'll be largely dependent on how the economic data comes out going forward. We want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us again next time. Kris and I are going to keep you informed about these market developments as we move along. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.